Let's take a look at it now. The options screener here. Are there any trades that we could make that'll make us happy today on the Monday, 12:25 p.m., 2.5 hours until the market closes? We have the options screener up. These are for put options. Dividend payers, 12% annualized return and greater. And the very first one on here, I may have some interest in, and that is Arbor Realty Trust. I have over 4,300 shares of Arbor Realty Trust. We already made this trade, I don't know, 2 weeks ago, maybe closed it last week. And it is for a put, selling a put expiring June 16th. That's 53 days out. I was looking at the 750 strike. It's paying 20 cents. So what is the math? What does that math tell us? So 20 cents divided by 750, right, equals 2.6%. But then that is in 53 days divided by 53, multiplied by 365, and we end up annualized. Hey, that's not right. That's not the number we want, is it? No, we want 20% plus. So what if we look out a month to July 21st, what is that? 7? No, that's still not going to be enough, is it? Still isn't going to be enough because we're adding another 30 days to the mix. 30 cents divided by 750 equals that. 4% divided by 88 multiplied by 365, 16.5. No chips. May 19th, what about probably no action? It's at 5 cents. Nope. All right, moving off that one. Let's go back up to the board. Yes. Bank of America. We need to look to sell some covered calls on Bank of America. Not sure we'll get much action today because it is down just a wee bit. Blackstone will look very interesting to us soon, so we'll keep an eye on that this week. Citigroup. Do we still have a position open in Citi? How do you not know this? I know that we have a covered call active, but do we have any puts? We do not. We have a call credit spread, $45 call expiring June 2nd. That was our bear claw roll that we did. We stopped, dropped, and rolled that, grabbed some more premium. And they're just down 7 cents today. Not sure what the action would look like on the puts. Let's just check it and let's go out. Whoa. That's 48.50. Let's go out a week. May 5th, 11 days out. 47.50. I mean, there's some action there. There is some action. For instance, this 42 cents. 42 divided by 47.50 divided by the 11 days multiplied by the annualized. It's 29% on Citi. It's on our radar, but it's not getting me too excited right now. What about the Cisco? What about old Cisco? We'll have to check earnings, though, if this is appealing. Cisco Systems, they're up 13 cents today. If you tried to sell a put, $11 days out on the Cisco Kid, What's the earnings tell us? When will they be reporting their earnings? Not until May 16th. Still nothing. That doesn't look appealing either. What about Dow? We messed around with Dow, made a few dollar bills on that earlier this year before I was recording the videos. Dow, formerly Dow Chemical. They're up today also. This is turning out to be the greatest video of all time. Not a single thing has happened, and I'm now asleep. Wake up. Wake up. Lane, I've been going to this school for 7.5 years. I'm no dummy. Now, if that you get that reference, hello. You are as cool as they get. If that line rings a bell at all, leave me a comment down below. I'll give you the old thumbs up and tell you how cool you are. Why are there? What is going on with all these FRCs? I don't even know what FRC is. F to the R to the C. FRC. Oh, First Republic. No thanks. I was looking at Visa. The Visa, but look how high they are just year to date. Gee willikers, Bart. Are you just that conservative? Man, I don't know what's happening today. Don't know. I want to know if I could make trades now. Goldman Sachs, IBM. Do we still have a position in IBM? I don't think so. I don't think we do. Let's just check on Goldman Sachs. And we'll check on IBM, just see what they're doing, because they did us a favor and they popped right up after earnings and we made some dollar bills. That was very nice. So Goldman Sachs up $3.22 today. What is their dividend yield? 278. IB and the M. IBM currently at 125.12. What is the action looking at on the puts? 81 cents at 125. That's 4 days out, 11 days. What kind of cushion do you got in there? Not much. What about 32 days out? 32 days out. That 121 isn't horrible. Let's go back to the IBM here. IBM. They've got that sweet 5.25% dividend right there. They already reported earnings. The street kind of liked it. They kind of liked it. There's that pop from earnings, right? And now they've been drifting back down. Year to date, what do they look like? They were down as low as 123, 123.28. 123.28. The I to the B to the M. That might be interesting. Let's go back to it. Take a look. It's 32 days out, so it's, it's a long way to go. It's at we'd be looking at a 24 delta, 26 delta, 26 delta, 77% probability of profit. That should be above our 12% minimum threshold on dividend paying stocks. 124 divided by 121 is 1%, just over 1%, but it is 32 days. So that's going to skew our number just a bit. 365. Hey now. 11.6. That won't get it done, will it? That will not, but I bet we can go to 122. I bet we can go to 122 and still feel comfortable because it doesn't move around much. We've seen that. Hasn't been below 123 this year, correct? Yeah, 123.28. So 122 on the IBM. Now we're at a buck 53 on 122. And it's 32 days out. What's happening? What kind of math are you doing? Oh, wait. My eyes were like, have been trained to look for the 20% plus. And since I've changed my threshold on companies like IBM or Johnson & Johnson, AbbVie, dividend paying companies, good quality companies. I know IBM it's no longer the growth company that it was many moons ago, but it's still cranking, still bringing in billions of dollars. So we'd be at 14.3%. Pretty conservative right there. I think we should try it. Let's look at a different talk yourself out of it. Let's just look at a different date to see, even at the same strike price though, because we eliminate or we chop off 7 days, does that still put us over 14% annualized? Let's try it out. 1/3 of 7 on the 122, okay, divided by the 25 days multiplied by the 365 days. See, now we've increased it to 16.3 and we've reduced our days. Obviously, that creates more potential for the underlying asset to move, but it also gives us an opportunity, still plenty of time to manage the trade, right? 25 days out. Because you can't go another week and still be comfortable, can you? Let's see. $122, 18 days out. You're collecting less money, but you're also creating more return. So we're at 16.3 there, right? 16.4. What does 113 and 122 look like on 18 days? We're at 18.7. Probably what we'll do right there. Let's do the 18 days out on the I to the B to the M. Ooh, we might be able to collect some more dollar bills right here. $24,400 in collateral. I need to get some more wheels going, some wheels on stocks that we wouldn't mind owning. Don't want to. I just like to collect premium forever, but if it happens, it happens. 115 times 2, $230 in 18 days. And that was filled. Okay, so now what's the exact math on that? 230 divided by 24,400 equals this divided by 18 days multiplied by 365. It's 19.1% annualized. So we'll put that on the board. Yes. Took a long time just to get to that, Bart. I'm asleep. Hey, wake up. Wake up. Just another little clue from that line where I said, Lane, I've been going to this school for 7.5 years. I'm no dummy. Well, that same character, he was in the back of one of the scenes, and it was like a chemistry class or probably a biology class. And there was a pig in a jar in formaldehyde or whatever you put something in before you dissect it. And he was tapping on the jar and he was mouthing, "Wake up." Oh, now I just feel like going downstairs and watching that movie. So if you do know that movie, leave that in the comment below. If you like this video, leave me a comment, anything. Just send a thumbs up, send a heart, leave me a long video telling me how you fell asleep during this video and you woke up at the end, whatever it is. That's fine with me because I will see you in the next video.